Here we go again with Redwire quarterly reports. Last time, if you remember, I made a video regarding Q1 report and we assessed how the message for the shareholders was changing, and finally Redwire was showcasing its capability to make money. If you remember, in Q4 2025, the narrative, the message was, okay, we are generating a lot of demand, a lot of traction. However, the margins were very tiny and this disappointed many shareholders. A message that has been changed in Q1, if you remember, when margins, thanks partially to hedge autonomy, or I would say mostly to hedge autonomy, but also a general increase and switch from low margin production and R&D to a high margin settings, has really changed the narrative in Q1. In Q2, what to expect? Now, the reason why I'm making this video is because many of you guys are asking me on X, on YouTube, and all the communities on Reddit, what to expect from Redwire. Should I buy before or should I buy after? Well, first of all, let me tell you, this is not an investment advice. I'm not an expert, and most importantly, I'm just one single voice in the chorus of many analysts, observers, and investors just like you that are watching this video. But I would like also to thank you so much for the continued support, also for the people, the users that comment on my posts, even those who disagree with me, adding a lot of value to the conversation. So I am extremely grateful. Now, this video is not going to be cut, so don't expect a high quality video, high quality rendering and graphics like the previous one. This is going to be just one shot video. So apologies if it's not going to be perfect. Probably sometimes I'm going to hear some and here and there. I'm gonna just perform minimal cutting after that, so it's gonna be straight to YouTube. I know many of you guys are waiting for that. So let's see and let's unpack a little bit what to expect for this quarter report. And I would like to say straight to the point two main things. Let's start from the most basic layer, which I think, in my opinion, will be the quarterly report, not of Redwire, but of SpaceX, which is gonna happen, if I'm not mistaken, tomorrow. Now, this quarterly report is gonna be extremely tricky for the entire sector. We have the experience, historically speaking, of SpaceX IPO, which created this vacuum effect where all liquidity was sucked away from high-risk space companies and flowing into low-risk space companies, which would be technically SpaceX. We might agree or disagree whether that is a fair assessment. I personally disagree, as you know. However, what we saw with the IPO might be eventually replicated with the quarterly report, and I'll explain you why. I have the numbers in front of me, so I don't actually memorize them. You will see me reading that, and I hope that is fine with you guys. The Q2 is expected to generate for SpaceX $6.87 billion for this specific quarter, okay? The adjusted loss per share is going to be 25 cents, and the adjusted EBITDA is going to be 2.03 billions. Now, what the potential outcomes and what implications, what are the effects of the potential outcomes of SpaceX quarterly report are going to be on Redwire? If there will be a clear beat, for example, on those numbers, we might see an increase of liquidity and more retail and smart money will buy the stock, therefore creating another potential vacuum effect, a little version compared to the one of the IPO. On the other hand, if the company will not beat the estimate, therefore there will be a clear miss or a semi-clear miss, is it possible that SpaceX might drag the entire sector down? Now, I'm not sure about it, but this is definitely a possibility, and I would like you to take this into consideration when it comes to asking me the question, should I buy before or after all the reports? So consider there is another incognita there that should be taken into account. Then we can look also at the potential commercial and economic and financial performance of Redwire. The second layer is the actual performance of Redwire. So let's assume everything is going to be alright and there is going to be minimal impact on whatever outcome from SpaceX on Redwire for the sake of the argument. Well, we have to break down a couple of points to understand what to expect. So the consideration number one is that $500 million of the recent ATM that many of you guys have despised grants a good cash runaway. However, I think the nature of this money is not just to provide cash runaway, but also to be invested in productive activities. This might involve, for example, expansion of R&D capabilities, production capabilities, and so on. Either way, there must be something, looking at the numbers when that happens, that shows that the book is heavy today for the benefit and future earnings of tomorrow. That is a good example of what investment looks like. And this is usually CapEx intensive. It means it requires a lot of cash that you raise through a proper ATM program, what you guys call also dilution. Now, based on my assessment, my assumptions, observation and tracking, and again, take me with a pinch of salt, we might have reached $100 million out of the original 500 million so far. That would make 1/5 of the total amounts. Again, my estimation is pretty broad, so I might be confuted, and I hope to see, guys, some of your comments in the link below and tell me what do you think. Probably you have more updated information than me. But the second consideration is, as we speak, and we have kind of hints here and there, is that Redwire might have been started already delivering or working or deploy resources for the IDIQ contracts and other defense wins. Now, Redwire has an history of wins since the acquisition of Edge Autonomy, with the military, US military, in Ukraine, in Belgium, Taiwan, UK. However, most of those projects tend to be classified, kind of secret, so we never get to know when there is an important win unless that is discussed during a quarterly call. Therefore, we are kind of blinded when it comes to the wins. That has to do with the demand, so for example, book-to-bill ratio, which we expect and we hope that to be very high, but most importantly also with the revenue, just to show that the demand is translated into an actionable move for Redwire. And the third most important point, I think this is the most crucial, is the message that management wants to pass along through the call. Now, at the beginning I told you that Q4 2025 was about demonstrating the demand and validating the backlog and validating that Redwire was there and there was a clear demand. And it was growing faster than the capacity of Redwire even to deliver those projects. Therefore, all the delays and the backlog and so on. Q1 2026 was actually a response to what was missing Q4 2025, because some investors got really concerned by the low margins of Redwire, margins that got improved after Edge acquisition in Q1 2026. Now, is that enough? Well, no, because investors want to see a confirmation, wants to see that Q2, Q3, and potentially also Q4 will confirm this trend of high demand and high margins, and therefore show that Redwire is a mature company, is closer to its break-even date. Now, most of the reaction of Redwire performance-related component will come, I think, from this message. If the management will be effective in delivering the message that, listen, we are able to do money, we are able to capture demand, and the business is financially healthy, well, then investors will react very positively, especially smart money, which are usually the first to understand those kind of messages and the most sensitive for risk reasons. However, if the company will fail to show that margins are either not increasing or not even remaining at the same level of Q1 2026, well, there might be some problems. So that is quite a challenging moment for Redwire. It's geopolitically probably for this company an opportunity to showcase its solutions. In particular, I think about Stalker and Penguin VTOL solutions, the UAVs and all the drones and the components and the payloads and the sensors. However, I really believe that there are good chances for this company also to showcase interesting financial results. To summarize and to wrap it up, I do believe that this quarter report must necessarily showcase a message that combines both a growing demand, in numbers would be a book-to-bill ratio of at least 1.5, okay, and high margins. When I say high margins, I would not expect something below 23%. I think those are numbers we might look at. EPS as a result might be improved. We need to look at